Michigan Constitution of 1963, Article 9, Section 1. The legislature shall impose taxes sufficient with other resources to pay the expenses of state government. Section 2. The power of taxation shall never be surrendered, suspended, or contracted away. Section 3. The legislature shall provide for the uniform general ad valorem taxation of real and tangible personal property not exempt by law, except for taxes levied for school operating purposes. The legislature shall provide for the determination of true cash value of such property, the proportion of true cash value at which such property shall be uniformly assessed, which shall not, after January 1st, 1966, exceed 50%, and for a system of equalization of assessments for taxes levied in 1995 and each year thereafter, the legislature shall provide that the taxable value of each parcel of property, adjusted for additions and losses, shall not increase each year by more than the increase in the immediately preceding year in the general price level, as defined in Section 33 of this article, or 5%, whichever is less, until ownership of the parcel of property is transferred. When ownership of the parcel of property is transferred, as defined by law, the parcel shall be assessed at the applicable proportion of current true cash value. The legislature may provide for alternative means of taxation of designated real and tangible personal property in lieu of general ad valorem taxation. Every tax other than the general ad valorem property tax shall be uniform upon the class or classes on which it operates. A law that increases the statutory limits in effect as of February 1st, 1994, on the maximum amount of ad valorem property taxes that may be levied for school district operating purposes requires the approval of 3/4 of the members elected to and serving in the Senate and in the House of Representatives. Section 4. Property owned and occupied by nonprofit religious or educational organizations and used exclusively for religious or educational purposes, as defined by law, shall be exempt from real and personal property taxes. Section 5. The legislature shall provide for the assessment by the state of the property of those public service businesses assessed by the state at the date this Constitution becomes effective, and of other property as designated by the legislature, and for the imposition and collection of taxes thereon. Property assessed by the state shall be assessed at the same proportion of its true cash value as the legislature shall specify for property subject to general ad valorem taxation. The rate of taxation on such property shall be the average rate levied upon other commercial, industrial, and utility property in this state, under the general ad valorem tax law. Or, if the legislature provides, the rate of tax applicable to the property of each business enterprise assessed by the state shall be the average rate of ad valorem taxation levied upon other commercial, industrial, and utility property in all counties in which any of such property is situated. Section 6. Except as otherwise provided in this Constitution, the total amount of general ad valorem taxes imposed upon real and tangible personal property for all purposes in any 1 year shall not exceed 15 mills on each dollar of the assessed valuation of property as finally equalized. Under procedures provided by law which shall guarantee the right of initiative, separate tax limitations for any county and for the townships and for school districts therein, the aggregate of which shall not exceed 18 mills on each dollar of such valuation, may be adopted and thereafter altered by the vote of a majority of the qualified electors of such county voting thereon, in lieu of the limitation hereinbefore established. These limitations may be increased to an aggregate of not to exceed 50 mills on each dollar of valuation for a period of not to exceed 20 years at any one time, if approved by a majority of the electors qualified under Section 6 of Article 2 of this Constitution voting on the question. The foregoing limitations shall not apply to taxes imposed for the payment of principal and interest on bonds approved by the electors or other evidences of indebtedness approved by the electors, or for the payment of assessments or contract obligations in anticipation of which bonds are issued approved by the electors, which taxes may be imposed without limitation as to rate or amount, or, subject to the provisions of Section 25 through 34 of this article, to taxes imposed for any other purpose by any city, village, charter county, charter township, charter authority, or other authority, the tax limitations of which are provided by charter or by general law. In any school district which extends into 2 or more counties, property taxes at the highest rate available in the county, which contains the greatest part of the area of the district, may be imposed and collected for school purposes throughout the district. Section 7. No income tax, graduated as to rate or base, shall be imposed by the state or any of its subdivisions. Section 8. Except as provided in this section, the legislature shall not impose a sales tax on retailers at a rate of more than 4% of their gross taxable sales of tangible personal property. Beginning May 1st, 1994, the sales tax shall be imposed on retailers at an additional rate of 2% of their gross taxable sales of tangible personal property, not exempt by law, and the use tax at an additional rate of 2%. The proceeds of the sales and use taxes imposed at the additional rate of 2% shall be deposited in the state school and fund established in Section 11 of this article. The allocation of sales tax revenue, required or authorized by Sections 9 and 10 of this article, does not apply to the revenue from the sales tax imposed at the additional rate of 2%. No sales tax or use tax shall be charged or collected from and after January 1st, 1975 on the sale or use of prescription drugs for human use, or on the sale or use of food for human consumption, except in the case of prepared food intended for immediate consumption as defined by law. This provision shall not apply to alcoholic beverages. Section 9. All specific taxes, except general sales and use taxes and regulatory fees imposed directly or indirectly on fuels sold or used to propel motor vehicles upon highways, and to propel aircraft, and unregistered motor vehicles and aircraft shall, after the payment of necessary collection expenses, be used exclusively for transportation purposes, as set forth in this section. Not less than 90% of the specific taxes, except general sales and use taxes and regulatory fees, imposed directly or indirectly on fuels sold or used to propel motor vehicles upon highways, and unregistered motor vehicles shall, after the payment of necessary collection expenses, be used exclusively for the transportation purposes of planning, administering, constructing, reconstructing, financing, and maintaining state, county, city, and village roads, streets, and bridges, designed primarily for the use of motor vehicles using tires, and reasonable appurtenances to those state, county, city, and village roads, streets, and bridges. The balance, if any, of the specific taxes, except general sales and use taxes, and regulatory fees, imposed directly or indirectly on fuels sold or used to propel motor vehicles upon highways, and unregistered motor vehicles, after the payment of necessary collection expenses, 100% of the specific taxes, except general sales and use taxes and regulatory fees, imposed directly or indirectly on fuels sold or used to propel aircraft and unregistered aircraft, after the payment of necessary collection expenses, and not more than 25% of the general sales taxes imposed directly or indirectly on fuels sold to propel motor vehicles upon highways, on the sale of motor vehicles, and on the sale of the parts and accessories of motor vehicles, after the payment of necessary collection expenses, shall be used exclusively for the transportation purposes of comprehensive transportation purposes as defined by law. The legislature may authorize the incurrence of indebtedness and the issuance of obligations pledging the taxes allocated or authorized to be allocated by this section, which obligations shall not be construed to be evidences of state indebtedness under this Constitution. Section 10. 15% of all taxes imposed on retailers on taxable sales at retail of tangible personal property at a rate of not more than 4% shall be used exclusively for assistance to townships, cities, and villages on a population basis as provided by law. In determining population, the legislature may exclude any portion of the total number of persons who are wards, patients, or convicts in any tax-supported institution. Section 11. There shall be established a state school aid fund, which shall be used exclusively for aid to school districts, higher education, and school employees' retirement systems, as provided by law. 60% of all taxes imposed at a rate of 4% on retailers on taxable sales at retail of tangible personal property, 100% of the proceeds of the sales and use taxes imposed at the additional rate of 2%, provided for in Section 8 of this article, and other tax revenues provided by law shall be dedicated to this fund. Payments from this fund shall be made in full on a scheduled basis, as provided by law. Beginning in the 1995-96 state fiscal year, and each state fiscal year after 1995-96, the state shall guarantee that the total state and local per pupil revenue for school operating purposes for each local school district shall not be less than the 1994-95 total state and local per pupil revenue for school operating purposes for that local school district as adjusted for consolidations, annexations, or other boundary changes. However, this guarantee does not apply in a year in which the local school district levies a millage rate for school district operating purposes less than it levied in 1994. Section 12. No evidence of state indebtedness shall be issued except for debts authorized pursuant to this Constitution. Section 13. Public bodies corporate shall have power to borrow money and to issue their securities evidencing debt subject to this Constitution and law. Section 14. To meet obligations incurred pursuant to appropriations for any fiscal year, the legislature may by law authorize the state to issue its full faith and credit notes, in which case it shall pledge undedicated revenues to be received within the same fiscal year for the repayment thereof. Such indebtedness in any fiscal year shall not exceed 15% of undedicated revenues received by the state during the preceding fiscal year, and such debts shall be repaid at the time the revenues so pledged are received, but not later than the end of the same fiscal year. Section 15. The state may borrow money for specific purposes in amounts as may be provided by acts of the legislature adopted by a vote of 2/3 of the members elected to and serving in each house, and approved by a majority of the electors voting thereon at any general election. The question submitted to the electors shall state the amount to be borrowed, the specific purpose to which the funds shall be devoted, and the method of repayment. Section 16. The state, in addition to any other borrowing power, may borrow from time to time such amounts as shall be required, pledge its faith and credit, and issue its notes or bonds therefor, for the purpose of making loans to school districts as provided in this section. If the minimum amount which would otherwise be necessary for a school district to levy in any year to pay principal and interest on its qualified bonds, including any necessary allowances for estimated tax delinquencies, exceeds 13 mills on each dollar of its assessed valuation as finally equalized, or such lower millage as the legislature may prescribe, then the school district may elect to borrow all or any part of the excess from the state. In that event, the state shall lend the excess amount to the school district for the payment of principal and interest. If for any reason any school district will be or is unable to pay the principal and interest on its qualified bonds when due, then the school district shall borrow, and the state shall lend to it any amount sufficient to enable the school district to make the payment. The term qualified bonds means general obligation bonds of school districts issued for capital expenditures, including refunding bonds issued prior to May 4, 1955, or issued thereafter and qualified as provided by law pursuant to Section 27 or Section 28 of Article 10 of the Constitution of 1908, or pursuant to this section. After a school district has received loans from the state, each year thereafter it shall levy for debt service, exclusive of levies for non-qualified bonds, not less than 13 mills, or such lower millage as the legislature may prescribe, until the amount loaned has been repaid, and any tax collections therefrom, in any year over and above the minimum requirements for principal and interest on qualified bonds, shall be used toward the repayment of state loans. In any year when such levy would produce an amount in excess of the requirements and the amount due to the state, the levy may be reduced by the amount of the excess. Subject to the foregoing provisions, the legislature shall have the power to prescribe and to limit the procedure, terms, and conditions for the qualification of bonds, for obtaining and making state loans, and for the repayment of loans. The power to tax for the payment of principal and interest on bonds hereafter issued, which are the general obligations of any school district, including refunding bonds, and for repayment of any state loans made to school districts, shall be without limitation as to rate or amount. All rights acquired under Sections 27 and 28 of Article 10 of the Constitution of 1908 by holders of bonds heretofore issued, and all obligations assumed by the state or any school district under these sections shall remain unimpaired.